All right. Should we start, Mark?
Yes, please.
Yeah. So how's everything been in London?
Oh, well, still locked down. Yeah, trying to get a visa to go back to China. I think might be able to go back in the next couple of weeks. We'll see. But
All
then I'm a
right.
bit worried I might be stuck in quarantine for 3 weeks. So yeah, nothing is easy this year.
3 weeks. Yeah. No, Chinese New Year's coming. We'd love to see you here. Thanks everyone for joining. We'll just get it started. This episode of the Art of Law will be we're taking a little bit of a different approach. I think we did get a couple interesting questions about the star market, and we decided maybe the rest of us could benefit from just understanding a little bit more. So
Is that true, Sean? Did anybody ask us about the Star Exchange, or is this just
yeah.
you making this up? Really?
Yeah. All right. I don't
believe
include
you.
you in all the emails, Mark, but
Okay.
let me see. Guys, if you have any questions, you can always leave it in the chat. See. And yeah, we're always happy to take any questions during the webinar. If you have, I'll get to them as they are appropriate. And why don't we just get started? So this one is about the star market, which is a part of the Shanghai Stock Exchange. And Mark, I want to ask you a little bit about your experiences later, but I was doing my own homework about the Shanghai Stock Exchange and its history. And I saw that it was closed in the 50s after the Communist Revolution, and then it reopened again in 1990, which I thought was very interesting. I don't know if you were if you had moved permanently to Shanghai yet, but I also included some pictures just for context, because one of the things that we like to do here in the Art of Law is put a little bit of context around what we're talking about. And in this in the picture book that Mark left here, the picture on the left is Nampu Bridge, Shanghai in 1992. And so this is 2 years after the Shanghai market reopened. And I think let me turn on my pen here. 1 second. The reason why I thought that this was such an interesting picture for this is because if you look at the skyline here, this is 1992, and this is in 2004. So Mark, and this is of course the star market, which opened up in 2019. So I wanted to ask you, Mark, a couple questions, but the one that popped in my head first was, how was the capital markets, how do people react to that in Shanghai during the early days when you were here? Was it a very common thing for people to talk about, or how was it?
Yeah, so I think that photo there, I guess probably half the people were asleep at the stock exchange with those old things. So I think when they first set up, I was a student when I first got here, so I had no money. But even back then, I do remember seeing, if you walk down near, because I know where the stock exchange is now in Shanghai, but I think the security houses were near somewhere like Sichuanlu, and there was, anyway, near People's Park. You'd walk and you'd see mostly old people lining up trying to buy shares. And I guess you can see in that screen, even today, I think it's right that stocks that are going up are red and stocks that are going down are green. So it's the opposite of perhaps what Westerners would think when we see stocks. So I think, back then there was a lot of scandals, a lot of people. It was like a herd mentality. It was really like a lottery, and people just buying like crazy, but obviously from a low base. So I think it's pretty remarkable. And that's, I'm not an expert on the Star Exchange, so I guess we're just thinking a little bit out of the box. What can foreigners do with the Star Exchange? But I think we've really seen China grow a capital market in the last 20 years, which is pretty incredible.
So I know this might be kind of a tough question, but do you remember what type of companies were being listed during those old days? Because
I don't
obviously
really. remember, but I think I think they were all the big old state-owned enterprises. You know, I know number 7 bicycle factory, number 4 sock factory. It was like, so I think my imagination was like that, and you know, because the Chinese people, even when they had less money, were good at saving money. This was something they wanted to put investments in. So I think, you know, back in those days, people used to call it casino or something like that. So I think, you know, there are still obviously issues, but it's really come along with, you know, corporate governance and all this. So I think those days were very different from today.
So I think that answers that last question I wanted to. I mean, the question I wanted to ask was, what was there a specific? There wasn't. I guess there wasn't a specific focus on any particular industry during those times. It was just whatever was around. And
I
now we
guess it
have
was heavy industry, I'd be guessing, if anything.
right. And now we have the star market, which is specifically focused on technology. And I guess maybe for the listeners, this presentation will be broken into 2 parts. One is obviously the star market, but the second one will be how can, you know, foreign companies actually utilize this knowledge and share in the benefits of the star market. So let's start off with the first one. Mark, do you want to give us a little bit of background about the star market?
Yeah. So look, I'm not an expert on this. I'm not a securities lawyer. So I do, you know, cross-border corporate and M&A, and mostly with foreign companies. But yeah, I know a little bit about the star market, and I think what the story of the star market is, like you said, it's a new exchange. It's only a few years old, and it is focused on high tech, and it makes it easier because I think traditionally the problem for a lot of companies was to really get listed in China. It favored companies that have been around for a long time, companies that had a proven track record. And yeah, we live in the generation of Tesla and Amazon and Google and Uber and Airbnb and all these kind of tech companies, which, you know, don't always, you know, start making money until much later or making profits until much later. And so I think the star market is a little bit like China's NASDAQ. And so the industries it's looking at are things like new generation IT, high-end equipment, new materials. You know, so new materials, yeah, that's a broad term where we see a lot of interest from our clients as well. New energy, but that might even include renewables. But I think you've seen so much interest in China with batteries for cars and, you know, these kind of new energies, and then, you know, environmental protection, energy conservation. Again, something which I think people have been talking about for 10 or 15 years. About that there's a lot of money in China for environmental protection. But I only believe in the last few years it's really taken off. And then perhaps, you know, biomedicine and life sciences. And this can also include things like diagnostics, oncology. So to tell you the truth, if I look at that list, it really is very much like the list, except for maybe consumer and retail, that most of the clients we get now looking at China, they would fit into that list. Maybe biomedicine / life science would be even better. But that's, and then of course, on the side there, you've got cloud computing, artificial intelligence, manufacturing. So I think it all makes sense. That's all a bit like China 2025 as well. So you can see that this firstly addresses a pent-up demand on the part of Chinese investors, but also aligns closely with Chinese strategic ideas about how they want to move the economy to a knowledge-based economy, where they see the biggest growth to be, and where they want to take the lead, not just follow Western companies. So yeah. I guess it's very exciting.
And we'll get a little bit into that. But I think maybe first, just to give a little bit of context on the star market, maybe we have this slide here about, you know, how successful has it been, because it is very new. So even with that in mind, it has been wildly successful. I did a little bit of research on the internet and just found out some of these key numbers here. We'll just run through it very, very quickly. But the ones that I thought were quite interesting were this 233 IPOs in 2020 makes the Shanghai Stock Exchange, and of course the star market, which is part of it, first in the world, which is quite amazing. The second, of course, being the NASDAQ. And then the third one was the Shenzhen Stock Exchange. So there is a lot happening in China. The other one that I thought was also quite interesting was this number right here with the 18 million new investors. And I think, Mark, I think one of the questions I wanted to ask you was, you know, there's in the West, there's a big trend towards retail investment uh, jumping on the scene. China, it might be a little bit behind, but I think this number right here shows that they are not too far behind. So, you know, listing on the Star Exchange might expose you not only to the current capital market, but also to the future growing capital market with the number of new individual Chinese accounts that are opening up month after month, year after year. Um, with that said,
I
though,
mean, I think on that, the thing is, though, 18 million is a big number of people, but for China, it's not a very big number. So, I mean, I
no,
think it means that there's still a lot of growth. I mean, whatever they want to do. And I don't think you've mentioned how big the total market cap is there on the right-hand side of the screen.
yeah, um, yeah, it is. I think it is, like you said, Mark. With the users, it's big, but it's not indicative. I mean, it's more indicative of future growth because this is big, but I think it can definitely grow in the future. So this is 3.3 trillion RMB is a large number. Don't get me wrong, but yeah, it certainly can get larger in the future too. So we shouldn't look at the present value. We should probably think about where it can go. Uh, so Mark, I know that you just talked about the different sectors, but maybe we can break down, you know, just how it is focused within the star market.
Yeah, so we've actually done some research. So if people reach out to us and they're nice in the email, we may give them the Excel sheet we did. So we looked at all the companies and we put in the website, how much money they raised and what they're actually doing. And so it's kind of interesting that, basically it is split into different sectors. And the thing that we're looking at the most at the moment is the biomedicine, which we will call also life sciences. But 220 companies, within, I think it's 3 years. So it's interesting. And the amounts which are raised, they vary from, a couple of 300 million renminbi up to 5 billion renminbi. So I think what's interesting is these companies are in sectors which are competitive in China, and where we do have foreign tech companies interested, but it's difficult for them because, if you're tech, you're kind of at the cutting edge. It's not like an old business. So if you're a tech company, you've probably got your hands full with Europe and maybe North America. You might feel that's enough because, tech is so fast moving. And you think, China, boy, it's a big opportunity. And maybe we have to be there in some way. But, what can we do? And so that's why I thought it might be interesting for foreign companies to think a bit about the Star Exchange, because everybody always thinks about, Alibaba, Tencent, and these big companies. Here, we've got a lot of companies that have been recently vetted, not saying that means they're all perfect, but they've been recently vetted and they are, cash rich and they are high tech companies and they want to expand their business. So these could be a very interesting pool of companies to look for to partner up with, I think.
So and these are not the top of the star market. I can see these are some of the smaller stars, but I mean, take a look at the turnover here in millions of RMB. They're not particularly large. I mean, they're listed on the Star Exchange. So it is, I think, quite, maybe it is like what you said, Mark. These companies are looking to grow. They're looking to partner. They're looking to acquire. So yeah, I think this is a very competitive mix. And of course, we can always send you the copy of the PPT after, but we also, put a little bit of background on these companies and just translate it into English and give some more background.
Yeah. And we have that fantastic Excel sheet that was put together, yep, which has a lot of info. So if somebody has a compelling story, we'll also send that to them.
So, Mark, maybe we can talk. We'll start to transition a little bit. So, how can foreign companies, start to look at the star market for opportunities?
Well, I mean, I think so I think the thing is what I just said again is the idea that is for a lot of these tech companies, especially if you're like in value-added technology or you're trying to sell an environmental technology and your clients or customers will be primarily, cities, or there's a big rollout, it's difficult to do that. So firstly, you probably have to be on the ground. You have to be resourced in China, and it's a very big market. So even if you start in a small place in China, it's still a big market. So I think we're seeing more and more companies thinking about joint venturing with Chinese companies to take advantage of those things. And that joint venture may be an equity joint venture, or maybe it's a license of technology, or maybe it's something else which we haven't worked out. But I think this is something we're going to see. And then I think for some of these tech companies, what they're dreaming of is, let's say you're an Israeli tech company that has got a technology for autonomous cars. Maybe what you can do is you set up something in China, get investors to come in, and then subsequently your exit plan will be a listing on the Star Exchange. So I think there's these ideas, and normally when people have these ideas, in a few years they come to realization. I think the other driver is it may be better for the Chinese than M&A. So I think a lot of Chinese companies who've gone abroad and done overseas M&A, some have been successful, but a lot haven't been successful. I think also the amount of deal uncertainty is high. And then we have things like foreign exchange issues. The Chinese partner feels not really that it has enough people to kind of keep an eye on what's happening. And I think for most Chinese companies, you hear it all the time, they can make a much bigger return on investment on their China business than overseas. So what I'm thinking is, and the other point is, if you're doing an offshore deal, whether you're investing $1 million or $100 million, the hassle factor is probably very similar. And in fact, it might be even harder if you don't have the money somewhere offshore already, because if it's a big company, then people know what you're doing. If it's a small startup, it's going to be hard to get all the approvals. So I think this is one of the issues is I think there's a big opportunity for these Chinese companies to say, well, instead of trying to acquire the company overseas, why don't we get them to bring the technology to China? We'll do it as a joint venture, and then we can easily do it. It's small money for us, it's only a couple of million US dollars, and we can also use our platform in China to scale it up. So that's why I think this is another driver that will probably help. And then I think the Star Exchange, why I think it's interesting is it's a group of tech-heavy, forward-thinking, fast-moving companies. It has less attention than the massive, famous Chinese companies. If you talk to some foreign investment banker, they all say, oh, we know CIIC, we know Alibaba, we know Tencent, and then after that, they don't know so many. So, a few of those Chinese companies really get all the attention from overseas. But this, I think, is really a group of companies that probably are, very good partners. And the other thing is the best partners are normally companies that are a bit similar to yourself. So it's probably easier for a tech company to work well with another tech company. And so I think this makes sense. Obviously they're resourced quite well because, they're raising funds. And of course, you have to, if you've got a story and you've got a prospectus, nobody's going to put money in a company if you say, we're looking to raise funds, but we have no idea what to do with the funds. So they're obviously all looking to expand their business and for new opportunities.
And I think this goes back to what you were talking about earlier, that China is, it used to be that foreign companies came to invest into China, but now actually it might be that they're, Chinese companies are looking to stay at home and then look for domestic investment in their future projects. Mark, maybe you just want to quickly go over the Made in China 2025 kind of policy. You kind of echoed before about the government policy kind of gently nudging companies towards technology. Do you want to just say how this fits in?
Yeah, so I don't know, you don't hear about it as much as you used to. I think it was modeled a bit on the Industry 4.0 from Europe, the idea of this interconnected manufacturing, smart devices, Internet of Things, autonomous cars. So these are all things that people have to grapple with, or countries have to grapple with. And I think in the last 30 years, you saw that China was firstly just a factory where foreign people would bring their capital and the technology and just have Chinese factory workers assemble and make stuff. And then I think we saw maybe 10, 15 years ago, Chinese companies started to compete on some of those B2B type areas. And I think, we would have seen maybe around 2005, 2010, Chinese companies started to invest overseas. Firstly, it was like natural resources. But then I think we saw a few years ago, maybe 2016 to 2018 or so, there was a big jump where Chinese companies were investing in technology overseas and brands and things like that. And now I think maybe we're looking at the next stage where all of those things continue, but maybe the new thing is that Chinese companies look to get the foreigners to bring technology to China. They might supply the cash, the distribution, because a lot of these businesses are, electric new energy cars, next generation IT, advanced robotics, AI. These are all head-to-head with the US and the Europeans. But the problem is for all these countries is that the US and Europe, they can do some stuff to stop people doing things. But as long as it's not like in something very sensitive like defense or whatever, if you have a brand new life science technology, there's no reason why you can't bring it to China. The issue would be, can you really exploit it in China without a Chinese partner? Do you have the resources to, get it onto the market? Are you able to resource it through, let's say it's a pharmaceutical product, do you have the network to push it through? So I think the thing is, in a lot of these interesting areas which are technology heavy, if you're a company in Europe or the US, these are core markets, but China is too big to ignore. And it could even be like, say you're an autonomous car company, if you can't sell in China, maybe you can't be competitive globally in a few years' time. So, it would be like if you had a European strategy, but you decided to omit France or something, it might be a glaring hole in a national policy, an international global policy for a company just to ignore China. So I think this is the area. And I think 2025 is still very much, if you're on that, if you're a tech company that is somewhere connected to 2025 or something with life sciences, I would say, or something like online education or ed tech, these are where we see a lot of companies showing interest. Then in addition to being interesting for Star Exchange companies and for other Chinese partners, you're also interesting for local governments. And so we've seen a lot of these tech companies do deals where the local government gives them free rent, low interest loans, or if they put in a certain amount of money, they'll get matching loans or subsidies, because a lot of these Chinese local governments are very keen to fund the industries of the future. And they can even play a role in helping you connect with funds or private equity. And so I think this is something that we haven't seen really before. Before we would have seen Suzhou New District saying to foreign companies, "I'll come here, we'll get your application done quickly. We've got a uninterrupted power supply." But now we're actually seeing local government saying, if your tech is really interesting and good, we'll actually help you with funding. We'll get you low interest loans. We'll get you tax breaks, and really going the extra mile. And so I think this is the kind of thing that, if I was a tech company, I'd be looking at how I can maximize these advantages as well.
Yeah, I think the interesting part about this is that this policy was announced in 2015. We're already 5 years later, so 2020, and maybe so we're halfway. 2025 is just around just another half away. And looking back, you can see that a lot of this has it is definitely the way that it has been. China has been making progress. Like you said, Mark, it's not necessarily publicized as much anymore, just because of how, I guess because of the PR around it. But that doesn't mean that the underlying policy has necessarily changed. I mean, even in the past year, you have companies like NIO and Baidu has an autonomous project with BlackBerry. You have a lot of these autonomous and these very new technological companies partnering up, especially with foreign technology companies, to not only participate but to lead in some of these in these high tech areas. So if I was a high tech company, I would not I would use these past 5 years as more proof of concept that this is working and this is where you want to be in the next 5 years. Um, and maybe, Mark, we just talk a little bit about some of the other factors beyond just the China 2025 that will lead to growth for this sector.
Yeah, so I think look, these are also factors why our clients who are in the tech sector are looking at things. So look, China is experiencing GDP growth. They actually did have that V-shaped recovery, and so for a lot of our clients, things don't look so good in their home markets. So they're thinking, well, maybe China's the place to go. I think here we wrote, this is a few weeks old, this presentation when we did it. So we estimated it would be by 2030. I think some people are saying it might be by 2025 that the GDP will overtake it because just of the COVID shakeup. So times are really changing at the moment. And, it's not easy just to pretend that China doesn't exist. So you're going to have to work out whether you're going to try to engage and how you want to engage. And then I think, look, most of our clients who are not consumer facing, most of them have a digital aspect, whether that's e-commerce, if it's life sciences, diagnostics, I don't know, internet platforms or things like that. So a lot of these clients are looking at how can they perhaps, and digital, it's really, China's at the cutting edge in many ways. So what you learn in China might help you at home as well. So it's again, like no longer just a one-way street. China has innovation as well. And so if you're in China, you may find things that make you more competitive back home as well. And then I think urbanization is something which cuts across a lot of these issues. So new energy, Internet of Things, sensors, it's all to do with smart cities, with autonomous. These things all fix together. And so I think you can already see that China has a lot of these big cities. And of course, it's a lot of problems having big cities, but if they can find the solutions, so we were talking to an environmental company that does air filtration type things. And, they do a number of projects in Europe, but, they've got like 5 or 6 cities lined up in Europe. But you just really think in China, there's like 150 cities with over 1 million people. So there really is this density that if you can scale it up, it's a massive market. And then finally, I won't talk about too much, the US-China tech war. I'm sure it's not going to go away just because there's a change of administration. Yeah. I think China is also looking at its indigenous tech, but it doesn't mean that it's stopping people bringing tech in. I think they just want to wean themselves off being required to have, to buy chips from the US. They'd rather be able to make them in China. It's a bit like Western companies also want to have the ability to make vaccines in their own countries and PPE. These things are critical, so they will probably want the tech to also be in China. So again, this will be an issue of how you engage with China. So I think these are all factors driving companies to do joint ventures or to find some way into the Chinese market.
And Mark, I have a couple of questions for you for the audience. We're going to get into the next part, which is some of the examples of how a foreign company can take advantage of this. But maybe we should do some house cleaning here, Mark. One question is, do you think that the star market means that we'll see fewer Chinese companies listing abroad? I assume, through the NASDAQ, VIE, something like that, and go the more domestic route with the star market or the Shanghai Stock Exchange?
I think it's a numbers game. So I think despite the trade war, despite COVID and everything, I think it's true. And I'm not a securities lawyer, but I think there's more companies in the pipeline to list in the US, these Chinese kind of VIE companies, than ever before. So I think that's probably because it's a process that takes a few years, but there's a lot of those. I just think, back in 1990, there was just a handful of companies on the stock exchange. And, it's just, there's so much pent up demand. I think, like I say, I'm not a securities lawyer, but I know from the securities team at King & Wood, it was always, they were busy, not because times are good or bad. It was really whether the government wanted to allow more companies to list on the stock exchange. So I think there's lots and lots of potential for all kinds of listings. And I think, for a lot of companies, Star Exchange will probably be better for them than the US market, especially if they're in something like chips or something like that. But I think there's many companies who list in multiple jurisdictions. So I don't think it's necessarily a win-lose type thing. But I think, the Americans cannot probably think they can cut China off from capital markets. So I think there's just so much capital in China, they probably don't need it if the Americans want to try to.
And I think the second question here from Ralph kind of goes to that, Mark. Is the STAR market a direct response to delist the Chinese companies from the New York Stock Exchange? I don't think so because of the timing because of the year, but
I don't think so. I mean, I think the thing is, if you've got probably the second biggest economy in the world, maybe it's the first biggest, who knows? But they would have been thinking about this way before. There would have been a lot of internal discussions. Where will it be? Will it be in Shanghai? Will it be in Shenzhen? There'd be a lot. This is not something you just do quickly. So I think China does look at inspiration from other places, and NASDAQ was great, and I'm sure NASDAQ was the inspiration behind it, and they've probably been working on this for 10 years. So I don't think it's a response to anything, but it's just maybe it's a response that China is actually an innovator and a place where tech is now being created as well as just being consumed.
Yeah, I think you're right, Mark. I think maybe this actually goes more hand in hand with something like the China 2025, with the announcement in 2015, something about focusing on tech, more so than some external influence. For the questions from Ray Jiang and James, we'll go over this section right now. So Mark, maybe we can talk about some possible examples. Maybe this first of two.
Yeah. So these are just dreams of mine. So I don't know if people actually are doing them. We've got a few clients who are looking at things that are similar, and I think it's a time for some creativity. So, I can't say to somebody, oh, how many have you done of these? No, we haven't done any, but it's my guess that this is something that is likely to happen in a few years' time. So I think the first kind of cooperation model is, you have tech companies where people would have like an irrevocable royalty-free exclusive license from their home. So, sorry, this one here is somebody sets up a tech woofie, and we've got clients now who are looking to bring their tech to China, but they want it to evolve like humans and gorillas. There'll be a common ancestor, but the one way it will go in China, one way it will go in the West, and it may be quite different. And what I think about that is always, Yahoo. When I was younger, Yahoo was the #1 website, I think. And then, a few years later, the only real valuable asset Yahoo had was its shareholding in Alibaba. So, the idea is, if you could just hand over the technology to somebody who could do something with it, then it might be interesting. And then local government can, help support it. And then you could have an IP license, do the innovation. So we had a new client, they do a kind of, online processing, digital business, services or software, but it's in a financial institution background. So it's a bit, it's restricted and everything. So what they're looking to do is with a trusted partner to allow them to do the innovation to, not just turn it into a Chinese language interface, but also to adjust it to China and also to scale it for China. So, in that case, they're doing the IP license to a strategic partner and they're going to roll it out. But it could be also possible you find a Star Exchange company. So maybe we should say Star Exchange company, not that it's the Star Exchange, but you do a license with one of those kind of Star Exchange companies who are tech savvy, but not exactly in the business. So in the strategic case, it's actually somebody, it's in the insurance business. So it's somebody who's already a vendor to the insurance companies. So I think this is an interesting way. And then you will still own the foreground technology, and then maybe the innovation in China, maybe you can argue that you will own it, or at minimum, you should be able to secure irrevocable exclusive license to any improvements. And that might be, for the right companies, a very smart move, because it doesn't commit you to all these resources.
And Mark, what is a WOFE exactly?
Oh, well, so WOFE, sorry, a wholly foreign-owned enterprise. So I think this is for somebody who just wants to have a bit of a lockbox. So if they want to be on the ground, I mean, you don't necessarily need it, but you'd have the advantage of doing this. The company I just mentioned before, they're not actually setting up a WOFE. They're just going to do a cross-border license agreement and development agreement with a Chinese stakeholder. But this is what I think could work.
Okay. Guys, if you have any questions, just leave it in the chat, because we are getting into a little bit of the more meaty part of the presentation. And Mark, I guess these next few slides are just different steps of, another example of how you envision a foreign company can utilize this new channel of investment. So would you take us through it, please?
Yeah, so I want to preface, this is not the same as setting up a WOFE or doing a joint venture. This is more just my imagination running wild. So we have 2 clients who've been looking at this for a couple of years now. And to be also perfectly honest, they're successful tech companies, but they haven't done much with this. They've had meetings, they've got some investment banks involved, they're looking for partners, and they're discussing. But these tech companies are often very easily distracted because they're busy growing their markets in their home jurisdictions. So one of them is a UK company, the other one's a US company. And so, both have the same idea. And so, I also threw some ideas in with them. So these are just like, it's not like the normal kind of presentation we do where we say, this is what we've seen, this is how it works. This is what I think may be happening. So I think the first step, this one is really more that you set up a small joint venture in China and then scale it up. So the first step is for these companies is they'll set up a Chinese wholly foreign-owned enterprise. So we'll have to think a bit about things like structural. Is there a legal restriction? And I think someone said before, is it a way to get around the VIE? So that might be one of the issues. So maybe you'd have to go to step 2 or something if you're somehow restricted, but most companies are not restricted. And then investment's important, because a lot of these companies, there's a few different things. Firstly, a lot of the tech companies don't want to put lots of cash in China because they've got cash requirements everywhere else in the world. They're trying to raise capital. So they're not interested in raising capital just to put it in a Chinese bank account to get an operational license and then work out later how to spend the money. So one of the issues is what kind of operational licenses. It's particularly important if it's like a VATS or something like that, a value-added telco operational licenses. Work out what your minimum requirements are. And also you have to realize you're going to have to need to fund the WOFE. So we had one client that really truly believed that the Chinese local government would be funding them. And of course, the investment agreement said, if you put in this much money, then we'll give you this much money and we'll get you a loan. So, if anyone tells you that the Chinese are going to, local government's just going to give you all this without you putting anything in, I think you'd have to have a closer look. Then I think before you set up, look at your IP. A lot of these companies are digital or services or software. So software copyright is very important. Very few people do software copyright. And then I think the location, the leasing, you're going to need a location anyway. But, I think in this area, it's very important to have a strong local government connection in many cases, because not only will they give you the subsidies, maybe rent-free place to go, they might be able to help you find the local strategic or the local PE or funds. So the local government is much more involved. It's not like setting up a WOFE in the old days where you say, oh, can I get this power? Can I have this kind of furnace or something? It's more like, well, if I want to set up here, what can you do for me that Shanghai can't do, or what Nanjing can't do, or what Nantong can't do? Okay, business scope's important. And then the technology license is important, because the question is about the IPO. So this hasn't been totally tested, but I think if you have an irrevocable license to the technology, or if you give certain core technology to the woofie, because otherwise, if it's just a license that could be, stopped at will, it'll be too risky for a strategic or for you to get an IPO, because that means the overseas company could just turn it off overnight. So, it's not a free meal. It's not like, okay, I'm going to give some technology, hand over some handbooks, tell people they can put my brand on something. It has to be a bit serious about the technology. If you're not willing to bring the technology to some extent, and you're willing to give away the China market, or you're not give it away, but let someone else take the lead, then it may not be for you. Okay, so maybe the next step. So this is just basic license agreement or technology transfer. And then the next step, and I'm just taking one case as an example. Of course, everything can be different. But one client is now going to hire staff, secure the IP rights for the woofie. They've got like a plan how they will localize technology, get some patents in China as well. They will secure the subsidies, the preferential treatment, and then importantly, they're going to start building the business with Chinese customers. So one of these clients is in the automotive space, and so they set up somewhere near Shanghai. And so this is the next task. How can I start getting the first few customers? And then you have to work out, invoicing, sales model. Automotive is different from software. It's different from, ed tech. So these are complicated things you have to look at. The contracts, ICP filing, if you're a digital company, because most are, you need just an ICP license. Outsourcing. And then for a lot of them, because they're tech companies, whatever they don't have to do, they like to outsource. So in China, there's a lot you can do. You can outsource the HR and payroll. You can outsource the accounting. And then another issue is the control of the company. We don't have to go into detail. But basically, how can you, with a low touch, build up a business quickly so we can do step 3? Okay, step 3, sorry. And so step 3 is about converting this woofie into a joint venture. So, and this might be a strategic. So let's say if it's let's say it's an automotive technology. NIO, I don't think is a client of ours, but NIO is a fast rising Chinese car maker. Maybe they're interested in some cutting edge technology. So they might come in as a strategic. If they would come in, then you'll get a lot of private equity people, because there's a lot of funds in China looking for things they could invest in here. And then the funds could do it. And then also the local government could play a role. So I think this is the first round of the financing, and you could get financing from some key people, often connected to the local government, and then these incentives, what kind of space, taxes, subsidies. And I think people have to think about exit, but be a little bit strategic. So when we were first talking to one of these clients, the original idea was to do an IPO in Hong Kong. And so the idea was to have the Hong Kong company hold a woofie. So a little bit like the VIE model with the NASDAQ companies. But really, in the end, I think we leave that in as an opportunity. So in their chart, they would have a Hong Kong company in the middle of this just for flexibility. But I think the much better bet for them is some kind of exit within China. So IPO, a trade sale. It could be that this tech joint venture, let's say if the strategic partner thinks it's great, they'll just buy it. Or you could back it into a listed company. So there's lots of listed companies who can't compete with the new tech wave. So if they can actually get something new and sparkly, they can raise a lot of funds. And that's a new way to do things. And so anyway, joint venture agreement, core IP technology, how the joint venture technology will evolve differently from the parent. These are all issues to consider, but it's quite an interesting area. I forgot what step 4 was. So step 4, what was that now? I forgot what it was. We'll see. Investment rounds. And so I think, I haven't seen this yet, but I think the guys who we're looking at, or one of them at least, they're looking at a number of investment rounds. So they will get money from different funds. And so it's going a bit back. Chinese investors are interested in this. There's a lot of private equity in China now. 20 years ago, that wasn't the case, I don't think. And series of investments. And it's easier for the Chinese partners. I've always thought it's quite high risk for a Chinese company to buy a tech company overseas, because it could be like setting off a hydrogen bomb. You might have the office, but the people are all gone after a few months. So here, you've got a real way to control what's happening if you're a Chinese investor. You don't have to worry about foreign exchange, and you can really add value to the business. And you can do something that the foreign tech company can't do. You can scale it up in China, but depending on the technology, you need them for that tech. So that's
Yeah.
why I think it is actually an interesting symbiotic relationship potentially.
What and the Chinese shareholders at the bottom, Mark? I know that you made this slide. What do you think about that?
This is, I mean, the thing just meant maybe we should have put like little dots around it, that these are the Chinese shareholders. So, and basically the funds, the PE, it will become a complicated company at some stage with lots of little shareholders. But
And I
just
think
the company has a side, and they'll be diluted over time. But yeah, this is the idea. Is it better to have 25% of a valuable company or 100% of a company that's not going anywhere? That's the kind of concept.
yeah, and I think we'll tie a knot on it with the last step, the end game here.
Yeah, I only put in end game because the Avengers movie. I thought it sounded a cool way to say it. So I think look, 18 to 24 months, I think, is what people think is the minimum. It'll always take longer because the tech companies never do anything quickly except for tech. So tech companies, I don't think they're really equipped to enter the Chinese market quickly. It takes forever. Then the valuation process, working out what's the best exit, and liquidity for stakeholders, fulfilling the requirements for the IPO. Is the IP secure? Are you too dependent on the strategic? That could be an issue too. So these things might, factor in on what you want to do. So let's say in that case with NEO, if you're really a technology company and your major client is just NEO, it might be hard to do an IPO because, people will say, well, what happens if NEO cancels the contract or something? Or, do you really own the IP? Do you even own the IP for China and things like that? So I think we already mentioned it. Some people dream of this IPO on the Star Exchange. I think if it's a woofie, it's all possible, but it's much less likely. I think the most likely is something where you have a strong Chinese partner and they build it together because, the foreigners might be good at the tech. They're very rarely good at the scaling up in China. So, as a tech company. Yeah, so that's what I'm thinking. So I think that was it. Was that the last slide, or did we didn't have a summary slide, did we? We forgot to.
No, that would be the last slide. But I have a question for you, Mark. I think so. I think the reason why I said that we'll tie it up here because I think the main message that I think these different models that you're mentioning here is not necessarily. I mean, there's a few ways you can go about it, right? There's one where you can directly list on the stock market, which you think is a kind of a maybe less successful, less chance of success. But there are other ways to maybe circumvent and indirectly benefit from the star market. Is that what I'm getting here?
Well, I don't know. I think the star market, it might be if you're looking to do something. So, I mean, I think the thing is, when people did wholly foreign owned enterprises or joint ventures, very often I have the feeling they didn't really know what was going to happen at the end. They knew how they were going to start, but they didn't really know what it's going to be like in 10 years or 15 years. I don't think many people could think this. So that's one issue. I think this is just a new opportunity to do stuff. And the reason why I combined it a bit with the Star Exchange is this Star Exchange could be a pool of vetted companies that are tech savvy, have funds, and are looking to expand. So I think for some foreign tech companies, you have to ask yourself some tough questions. How much engagement do you want? Are you willing to just license your technology to a Chinese partner? That's the least effort, but of course, the least upside probably in most ways. Are you willing to do a joint venture where you're in a minority? That could be interesting. Are you willing to do this more complicated issue, or where you have rounds of funding and then you do this? But that takes a lot more effort. You need leadership time, management time, and I think it's a thing which I've noticed with tech companies. It's not easy for them to have space to do this. They're mostly busy improving their tech, securing their markets in their home markets, and trying to find more capital raising. And so to add on top of that, a Chinese element, that's why I think those things move slowly. And I think, we had a few Israeli companies talk to us about it, and they seem to think you could just set up a woofie and then, list in China. Yeah, but you have to build the company. And, not that many woofies that build a scale that you could do an IPO. There are some, but it took a long time, and it was a very static business. I can't even really think of one, high tech. Okay, maybe Tesla China or something. I don't know how that would work, but yeah, there's very, 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 very few. So that's why I think, in reality, you probably need the Chinese partner to be more involved in the whole thing. And, you just protect your IP and protect your rights, but let them make it big in China. So, if it's good in Europe, maybe they can supersize it in China, and you'll be part of the people benefiting.
I think one of the, partnering JVs, China market entry, we have a ton of videos on this. We've done many episodes of Art of Law on this. And I think, one of the things that we always harp on the benefits of this in terms of scaling up, easing the market entry, and also, some of the other logistical problems. But I thought it was very interesting that you said that the Star Exchange as a end game in itself, that the JV can, try to become listed. I think it's a very interesting idea in the sense that, I think because for us, we obviously deal with a lot of companies who are entering China, and for them, this is quite a large step. And just the entry alone is something that they're really focused on. But for you and for us here, we've seen it a million times. So our question is more, I guess, advanced. It's more, how does it end? How are you thinking about winding it up? And this goal of possibly IPOing on the Star Exchange, I think is fantastic. It gives a sort of an actual boundary, an actual goal to achieve. So we got some questions here, Mark. I'll start off with Ray Jiang's question. Hi, Mark. Do you think that Chinese investors would be open for dual class share structures in the case that a foreign company wants to retain some sort of control?
So I think this will be difficult because in China, if it's onshore, at least as far as I know, we don't have the different classes of registered capital yet. So I'll have to look into that in more detail. It's a good question. So maybe, Sean, if you can make a note of that, I don't know how we can save this, but we should look into this. I think that would be a reason why some companies might want to do it at the Hong Kong level, but then you can't list it in China. So that's difficult. I think at the moment, it's not really possible to do that. I'd have to check because my experience is mostly just with companies limited by registered capital. We'll have to do a bit of thinking about those companies which are public companies. So let us come back to that, but I'll think about that a bit.
We have a question from Ian. Compared with Star and the NASDAQ, could you share some thoughts on the less popularity of AIM, or London Stock Exchange main board for Chinese high-tech listings?
Well, I think there's not that, I've got a bit of an Australian background. And so, Australia has exported a lot of actors overseas. But, Hugh Jackman and Chris Hemsworth and all those guys, the big movie stars, they all like the shining lights of the US because it's the biggest market. And I think it's a bit like that with the Star and the NASDAQ. If you want to be the next, I don't know, Robert Downey Jr. or whoever is the biggest star at the moment, or the next Beyonce or whatever, I think America has a big draw. But I think the thing about AIM or the London Stock Exchange, it's nice, but it's mostly for people that couldn't make it to NASDAQ or Star.
Yeah.
So, but everybody has their place to go, and it's all just about the size of the market, the depth, the liquidity, and things like that. So I think AIM and the London Stock Exchange, they need to be like not trying to compete for the Alibaba listing. I think that would make more sense if they, target, if AIM would target, more reasonable opportunities for themselves. I think that's, they're going to be a bit of a niche. These companies might be a bit small, but this is number 200. this is, these are the companies which we're talking about.
Yeah, and I think these companies are not spectacularly large, especially for a China market. But I I think one of the my takeaways here is that, and we should have made a summary slide, but one of my takeaways is kind of looking at this list, and of course we do have a Excel sheet, and we can send the PPT. Just let me know. More as a guide or a starting point to see, are these companies, they obviously have been vetted, like Mark said, and they're looking to grow. They're competing with each other. And if you are a tech company that's even in the same universe, same orbit as some of these companies, then we got them all here. These might be interesting opportunities for you in terms of finding out how can I partner up. Who are their competitors? From a very business 101 standpoint. We have another question from Fred here, Mark. Hi, Mark. Should the foreign tech company and IP owner expect to give away majority control when entering a JV with a Chinese partner? Can the foreign company maintain majority control?
So I think, look, so, this is, it's a little bit of an old-fashioned question, what we're talking about, because this is the concept of there is no clear exit. So I guess they might be thinking they'll be doing this forever. But, in the things which I mentioned as the options of dealing with the Star Exchange, it's really, I think, if this is the route you want to go, you could do a joint venture with these companies, but it's going to be static. So there is no clear exit. If you're looking at an IPO, if you're looking at the Chinese company just having a technology license, the Chinese will be running the show. And then I think, this will be a complex question you have to ask yourself is, you probably have to give away majority control if you want it to really be a big business in China. It's not easy to do a big business in China as a foreign company by itself, unless you're a very big company overseas already, and you've got something that, that the Chinese really want. And then I think about maintaining majority control. You can't contain control if you want to do an IPO. You'll still be an important person in the board and all this kind of stuff. But I think if somebody thinks I want to have 100% control of everything, this might not be the route for them. They might need to scale back their ambitions. And I think it might not be the control of the entity that should be making people think the most. It's more about, how do I control my technology? How can I, before the IPO or something, how can I secure the technology? How can I remain relevant? These are complex issues that you can't just put in a joint venture contract. You have to really think about it. So we have a client at the moment last week, and they've got a computer software business, and it's a big business, but they have a vulnerability which people can exploit. And so, if they didn't have that vulnerability, it would have been easier to turn off things remotely or something like that. So I think, one has to always think a bit about, what's my software? We had one client who had a certain kind of truck, and they could remotely turn off the truck systems via the internet or something. And so if someone didn't pay for something, they just would turn off that truck. So I think it's not just about the joint venture contract, it's more strategic. What kind of business you're in? How does the technology work? Are you holding back some components? Let's say if it's some kind of high-tech sensor, will you have something that's still made in the US? Are you able to protect yourself that way? I think it's complex. You have to think very carefully before you enter the joint venture, and not just rely on what you can agree with the partner, but work out, the battlefield of the future and how you're going to get out of it.
And Fred, we do have some other videos on our YouTube channel on JVs and how to, some of these issues that you should think about. Like Mark said, this is kind of a old school question, so we do have a lot of material on that. And the last one, Mark, we have to wrap it up. We're a little bit over time. Is from James here. Have any Western companies actually listed on the Star Market already in the way we outlined, or is this something that you see happening in the future? I think, I talked a little bit about what my takeaways were, in that there are multiple ways to, I don't want to say exploit, but, use this opportunity. But Mark, please give us your thought.
So I don't think any, I don't think there are any foreign companies or wholly owned subsidiaries that have listed. There are a few on the Shenzhen Stock Exchange, I think, or joint ventures. Yeah, there are a few scattered around, but this is a thing which people have been talking about since like 2008. There was an announcement to make it possible, and I'm sure there are a few, but there's not many. So I think the question here is there's a lot of capital here, there's a big market here. How will tech companies take advantage of this? So this is really very much what I think will happen. I don't think it's happening at the moment. Obviously, I don't know what's happening behind the scenes.
And I think it's kind of a work in progress. The star market is relatively new, and the numbers here are. We don't want that. We're not trying to demonstrate that they're specifically currently very large, but they on a trend. It seems
but
like
also, I mean, the star market's only like 3 years old as well.
Right.
How old is it? It's only like, when was it set up? What was
Yeah,
it?
2019.
Yeah. So yeah, is that less than 3 years? It's like, I don't know. Anyway, it's not very old, is it? So it's less than 2 years old. So yeah, it's new. So even if you wanted to do it, you'd have to have that woofie lying around already and set up in the right way. And not many people would have worked all this out with the IP and the business. So, I think if you want to do this in the future, you're going to have to start, and it's probably going to be a 3-year project at minimum, I would guess, in real life.
But like everyone has pointed out in the chat, the conflicts with the U.S. Capital markets, the whole tech war that's happening too. These are all external factors that might be speeding up the process. So there is a lot of to consider, when answering these types of questions. Mark, we're going to wrap it up, but I'll just let everybody know in the chat that we do have an Excel sheet with a lot more of the information on some of the companies that are on the star market. We also can send a copy of the PPT, and I think I will send the PPT to all the people that joined today, like I usually do. So, anyways, thank you so much, Mark, for sharing your thoughts on this.
Yeah, thank you. Okay, thanks, Sean. Bye, everybody.
Bye, everybody. Thank you so much, everybody. Bye.